Peter, whenever you're ready, Peter.
Thank you. Good afternoon, everyone. I'm happy to introduce our next speaker. He focuses on residential real estate, and here are some fun facts about him. He loves golf. He just had a baby, and he's from Argentina, like Messi. I had the chance to do a one-on-one with Hernan yesterday. Had a very enjoyable conversation on South Florida's real estate market, and today he's going to talk a little bit about that as well as his business. Please help me welcome Hernan.
Thank you, Peter. Great job there. It was also a pleasure to talk to you yesterday. So, just to close up the year, I thought last week I participated in the Real Estate Forecast Summit that our National Association of Realtors put together. So I just thought it would be a good opportunity to walk you guys through what we're seeing on the market and what we're forecasting for next year. This is on a national level. If we have some time, we'll take a look at Miami-Dade. So basically, I'll start with the New York Times came out with this article saying that can the U.S. climb out of its unprecedented housing crisis? So we're going to try to see whether or not we're really in a housing crisis. The first thing that they showed us was that we're at our biggest moment in terms of household equity in the real estate market, right? We're almost the $35 trillion. So there's never been a better time to hold real estate. So from that perspective, we're not having any crisis in that regards. There's plenty of equity in our properties. Also very important, the difference in the median net worth between owners and renters. This is probably perhaps the most stepping stone for any family to start creating wealth is buying a property, and we can see here the difference between a renters and a homeowner equity. Moving on, the median net worth by age group, we're seeing a little bit of a delay in terms of the transition from baby boomers into millennials, but hopefully that's gonna get going soon. In terms of delinquencies, foreclosures, we have a little bit of a spike during the pandemic, but we're still in pretty normal, below 2%. So that's very little foreclosures going on. Affordability, this is probably where we're having a crisis in our nation with affordability. So this is an index that the National Association of Realtors puts together, and the higher the index, the more affordable homes are. And as you can see, we had a pretty good time in which rates were low, affordability was high, but now we're in a time in which properties are appreciated fairly quick and rates have come up, and that's why we're really struggling in terms of affordability. I was reading an article the other day that said that historically speaking, to be a homeowner, you're typically paying about 15% more. It's going to be more expensive, about 15% more than renting a property, but right now it's close to about 45%. So that's one of the biggest reasons that we're seeing less transactions going on in the market, because it's really expensive to be a homeowner these days. And I was actually talking a little bit about this with Peter yesterday, and the decision factor there is going to be how long are you planning to hold on into the property, right? Because of the closing cost that you will have. So in terms of existing home sales, we are experiencing a crisis in this regards. The last 2 years, we had about 20% below the 5 million homes that are selling on average on the previous years. So again, this is a result of the high rates that we're experiencing. I wouldn't say high, because if we look historically speaking, 7% is about average, but it feels much more higher than we were used to the past 15 years. In terms of what's going on with the rates and the Feds, John mentioned a little bit in our meeting today that we're expecting more cuts, but that not necessarily will translate into a reduction in mortgage rates. I think that inflation obviously is going to play a part, and we're still experiencing, to my understanding, and when I go to the groceries, I'm not seeing prices coming down. So we'll see what happens with the whether the cuts in rates by the Feds is going to translate into mortgages. So this is the prediction that the National Association of Realtors is giving. So they are hoping that we're going to come down, hopefully below the 6%. But again, if you think about it, also if we are seeing other assets outperforming the rates that we're seeing in terms of the mortgages, whoever is going to be allocating and lending money is going to require a higher rate of return. So that's also why it's getting harder to keep those rates lower. This is, to me, the most concerning factor in our nation is the national debt that we're having. You can see in the first Trump's term how much it was and how much it has increased, and we don't know really what Trump is going to do about it. I hope that he does something in this regard, but to me it's concerning, and the reason why it's concerning is because this will probably impact the trust that people are having on the US dollars, and we're seeing how gold prices are going up. So this could potentially translate into less confidence into our currency, and also the popularity of other alternatives like cryptocurrencies, and obviously hopefully real estate. When people feel that the US dollars is not keeping up with their value, they turn into other assets, and real estate is obviously actually the number one investment asset that people tend to turn. Regarding what's going on with employment and payroll, Florida has been one of the most increasing in regards of growing with employment. We have a very low unemployment rate, and obviously why is this important? Because employment and population are one of the fundamentals that drives a market in terms of price appreciation. So we're still looking pretty strong there. Florida continues to be the number one states in terms of population, with over 1,000 people moving each day. In terms of home sales forecast, so what they're saying is that the worst is over in terms of the sales that we've been having. So we can see how in October we are on a positive note in terms from what it was a year ago. But then I'll take a look a little bit more into this on a local stage, because again, real estate is very local. Everything that I'm showing here is on a national level, but it's very, very important that each time we talk about a certain property, depends where in the market are we looking. Month of supply, this is perhaps the most important KPI for our industry. It gives us an idea of where's the market at. Just as a reminder, 6 months of inventory is considered kind of like an equilibrium of the market. Very random, you're gonna see a market staying at equilibrium. The market typically swings from one end to the other, and that is from a seller's market to a buyer's market. We've been in a seller's market for the most time after COVID. Remember people looking for properties and putting offers above asking price. It's funny how we tend to forget about how not long ago we were in this kind of scenario. Now we're getting to a little bit of a buyer's market, which is a good note for buyers. More inventory coming into the market. It's still not quite pre-pandemic, but that's a good news for buyers, because we're seeing more properties on the market, and that gives hopefully it's going to give a relief in affordability. In terms of housing starts, new construction, if we look into perspective, look what happened in '08. It took us so many years to get back into around 1.5 million properties being built on a yearly basis. So we still have some catch up to do in these regards. And this is the final slide in terms of the forecast for 2025 and 2026. So we're fixing to see more home sales next year. This is also in line with what has happened in the last 10 election years. After the election years, that we see an increase in home sales. New home sales will also be impacted positively. In terms of appreciation, we're probably going to expect a 2% increase. Do remember that historically speaking, we see home appreciating in about a 4%. We have gone above the trend line, especially in South Florida, where we have seen appreciation in the double digits in the last 5 years. So I think this 2% is going to help us to get a little bit more in line, especially with the affordability that I was discussing before. Mortgage rates near 6%. My prediction, if we go below 6%, we're really going to start seeing all those buyers coming to the market, and then job gains around 2 million. How we doing with time? I think I still have just a couple few minutes left. So now I'm going to turn a little bit into what's going on in our local market. So this is a trend graphic. This is a tool that I use when I sit down with sellers and buyers to see where's the market at. And I just looked at Miami-Dade and put the last 10 years. And we're looking here what's for sale and what have sold. So for sale is the green line, the light green line, and sold is the dark line. So just to put into perspective, I was talking about inventory before. Miami-Dade has on average historically had about 20,000 properties on the market at any given time. We really came down during the pandemic, and then after that we are regaining some inventory. So we can see how, especially if we looked at the year over year, we're 42% increased in inventory. So that might sound alarming, but if we take a bigger look, we're still below what we used to have, around the 20,000 properties. And also do consider that our population has really increased. So we should have a bigger inventory, considering how much construction we have on the market and how many people are moving into our market. In terms of month of inventory, again, this is what to me is one of the most important things that I looked at. We're starting to, and this is the shift that I'm seeing in our market. We're shifting from a seller's market into a buyer's market. So what does that mean? That means more opportunities for buyers, more inventory, more options to choose from, more time to take a look at properties, more time to negotiate better terms on properties. So this is a good news for buyers. And then in terms of average price per square foot, look how much our market has appreciated in the last 4 years. It's been really a tremendous appreciation. Right now we're kind of in a neutral market. So year over year we're at 3% appreciation. We're at 543 on a per foot valuation. But again, it's very important if we're talking about resident, if we're talking about single family, if we're talking about condos, if we're talking about on the beach, if we're talking about inland. So real estate is very local. So if you have any questions, just let me know and we can take a closer look at your neighborhood. I hope that you have enjoyed the presentation. If you have any questions, let me know.
Hernan, let me ask you, on average, how long are property owners holding on to a property?
That's great. That's a great question. On average, it used to be 7 years. Now we're seeing that trend more towards the 10 years. So one of the conclusions that they were talking is that we have had a delay in terms of how much people are holding on to the properties, and we're starting to see some turnovers. So that's also is bringing some inventory into the market. Great point, John.
Hernan, question for you.
as far as the inventory? You're seeing more of the inventory coming from pre-construction developers starting to develop new homes as well, or the inventory is coming from people selling?
Good question there, Alex. So remember, Miami, we have very scarce land, so we're much more propense to see condos coming to the market. You know, we don't have these big developments. We have some that Lennar are building maybe to the south, near Homestead, but most of the inventory that I'm seeing coming to the market are older condos. Yeah, you know, I'm pretty sure that everybody's aware of what's going on with the condo market. So actually, condos 30 years or older, the inventory has doubled. So a good amount of the inventory that has come to the market are older condos. I think after we go through this storm of special assessments and reserves, I think that the consumer is really going to be the winner here, because we're going to see much more confidence in those older buildings. So it's a good opportunity right now to jump into those some of those older buildings.
And what about the report that they just came out with that some of these older buildings are actually sinking?
Yeah, I saw that. I saw that news. It is alarming. I think that they were saying that they have sunk 3 inches over the last, I don't know how many years. But the truth of the matter is, I attended a presentation of the San Regis in Sunny Isles. It's a spectacular building, and what I'm observing on the market is that, you know, people, they just want to live here, and they're not really looking that far ahead in the future, or what's going to happen with, you know, whether the building is going to sink or not. It may sound alarming, but I'm not seeing a reaction yet on the market in terms of that regards.
Got it. Thank you.
And as far as the reasonable seller, right? Because you always have some that are ridiculous, but taking into account reasonable sellers, how long is a property staying on the market?
Good question there. So what I'm seeing is that I still see sellers coming to the market overpriced, because, you know, sellers still think that we're in that post-pandemic where we have multiple offers. So I'm seeing most sellers coming overpriced to the market. So that's pushing the days on market to a longer stand. If we look at Miami-Dade, I think we are in the neighborhood of 60 days on market to get a property sold. And we might be seeing a little bit more of a longer period, because again, I'm seeing sellers coming overpriced. Now, the ones that finally or come to market within market value, there are buyers out there. You know, it's a matter of pricing. That's why it's so important to price a property right. You know.
Awesome.
Anybody else, guys?
Any other questions for Hernan? This is extremely important.
Yeah. Hernan, do you have any predictions that you feel comfortable sharing for the next 6 months of the real estate market? And if you do, can you say them slowly so I can write them down and hold you to them?
Predictions in terms of what? Inventory, pricing? Are you going to be a buyer or seller?
Any predictions that I can say to her, you know, man, Hernan predicted this 6 months from now?
Any predictions? That I think what we're going to see is we're not going to see much of a change in terms of rates. That's my personal prediction, because I think we'll continue to see somehow of inflationary environment. You know, what Trump is saying about immigration, what he's saying about tariff. So I don't see that rates are going to really come down. I think a lot of people are betting on that. And I think that we will continue to see more inventory coming into the market. So that could potentially affect pricing, meaning that I'm not gonna predict that we're gonna see a whole lot of appreciation in the next 6 months. So if you're a seller, I think you're gonna be in better spot to sell it now rather than wait.
I think the point you made about rates is so important, and people don't realize it. You know, rates between 5 and 7.5 are normal rates.
Right.
You know, what we lived through after the crisis of 07 and 08, I mean, it took what happened to get rates down that low again, which was pretty much a financial catastrophe.
Right.
But these are normal rates.
Correct.
These are normal that people will eventually get used to. This is what they can look for. You're not going to see the 4s and the 3s or even sub 5. It's not going to happen.
Correct, and I think what another point I didn't have a slide here, but if you looked at what some of the cycles that have been created in real estate, they go so in line with incentives that the government had put over our economy. So when they came out with that stimulus about sending checks to people, so many people that were not struggling financially, they got access to small loans, business loans, and they start speculating, and that's why we're seeing assets increase in price so much. So I think it's very important that you look at your investments and take a look and see where you're going to be, holding your savings, right?
The other comment that I had to Alex's point, and I can just tell you this from the banking perspective, and I don't know the exact figure, but I dare to say the majority of new construction is rental.
Yeah, a lot of we saw on a national level, and I'm not sure if you remember so the red line were multifamilies coming into the market. So there's a lot of multifamily coming to the market, and going back to Alex's question about new inventory, a lot of the new construction that you guys see is multifamily, so that's more rentals coming into the market, and then also these new towers that they're building, because they're so big, they take 5 years to get built. So we're not going to see that inventory into the market right away. It's going to be interesting to see how everything unfolds in terms of whether the government at some point is going to start intervening these big corporations that they keep buying these multifamilies, these single family packages, and they're not allowing maybe the first time home buyer, to put a bid on a property. All right.
Again, and thank you so much.
You're very welcome. Hope you enjoyed it.